Good afternoon, everybody. Jumping right in. Today is Tuesday, February 20th. I'm an associated member of T3 Trading Group, which is an SEC broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here's a position disclosure. I got out of SOXL, which I was short over the weekend pretty heavily. It was a great trade. I got into Path and Palantir again, small, today on the down move. I got out of BYON into the close because it really was at my target in the reporting earnings, so there's no point in keeping it into the report when it's at my target. We're still waiting for that report to come out, I think, but there was a little bit of an uptick here after hours. Palo Alto Networks looks like it's getting smizzoked after hours. Scroll up and see these numbers. They see their Q4 revenue 1.95 billion to 1.98 billion. So yeah, so guidance no good. Fiscal year revenue also no good on the guidance range for the revenue. So they got a miss on their guidance for Palo Alto Networks. Trading down. Anything else exciting after the close? Not really, right? We got Caesars. The big one is tomorrow with NVIDIA. Caesars looks like it's trading down a little bit after hours. We got FANG, Diamondback Energy. Hard to tell. Spread's so wide. Looks like it is up though. It's up a couple of dollars. Inside bid's up a couple bucks from where it closed. Doesn't really look like a lot of volume's going off. Teladoc is today. Teladoc smoked. Thanks, Pat. Teladoc, not looking good. Q4 rev is a miss. For like 10 million bucks. Fourth quarter adjusted EBITDA is a beat. Sees Q1 adjusted EBITDA. The range is below the estimates. So, missing on guidance, it looks like, and missing on revenue. Not what you want from a growth company. Not what you want. All right. Hope everybody had a great trading day today. Let's have a recap. So the SPY's down 0.65% here at the end of the day. Q's down 0.9%. And the IWM down 1.4%. So the Russell was down the most on a percentage basis. At one point today, the Russell and the Q's were battling on who would be down the most. The IWM gapped down significantly more than the Q's, but the Q's traded much worse off the open. We can see that here with our charts. So there's the SPY, just not what I want to look at right now. IWM, much larger gap down, but mainly sideways action, pulled a little bit lower midday and then continued to go sideways. The Q's, on the other hand, gapped down much less, but they were super weak off the open. Made a low, a lower high, a lower low, and then kind of grinded up into the close. So I think that the big thing from today to pay attention to is the potential break of this uptrend, particularly for the NASDAQ. So this is what we discussed in the morning meeting today was we're basically asking ourselves for both the SPYs and the Qs, is the high from Friday a lower high compared to the low for February 12th? It only really is if it's confirmed by a lower low, which means that the market needs to get below February 13th's low. And if you do that, then you're really breaking beneath these moving averages for the first time since this rally started in the beginning of November. Like really getting below them and holding below them potentially. I know there was one dip in the beginning of January, but we discussed at that time why that broader dip made sense at that time. So the Qs, and by the way, even when that happened, that bigger dip in the beginning of January, the uptrend never broke. If you're being super, super micro, maybe you would be looking at the December 20th low that did break, but you know the real major last pivot low was on December 4th, and then we had a major pivot low on January 5th, and then it's just been a sequence of higher highs and higher lows ever since then. So the question again is, and this is one of the ways in which a trend could break, is with a lower high coming in. So we have this potential lower high from Friday when the market sold down and some of those semiconductor names finally lost their parabolic nature, specifically SMCI. SPYs are the same deal. Friday's a potential lower high versus the February 12th high. So I said in the morning meeting today was the levels we need to pay attention to are Friday's high and the February 12th high on the upside, and February 13th, the CPI low on the downside. Because if you lose that low and you hold below it, then you're potentially losing this uptrend where we, on this very small time frame at least, would be going from a pattern of higher highs and higher lows to a higher low, to a lower low from Friday. Oh, sorry, a lower high. I can't speak today. See, this is what happens after a 3-day weekend. A lower high from Friday leading to a lower low if the February 13th low breaks. If I'm not saying the words right, I think you guys get the point. So the Qs today, that February 13th low is 425.33, and we traded below that today. The low of the day today is 423.50, so we actually breached that low by almost $2, but we closed above it, and closing above it is key, or below it. You can't just tick below a level and shake everybody out. You actually have to close below the level. So the Qs here are definitely flashing some warning signals at this point, but they did not actually confirm a break of the uptrend. So the trend is your friend. The trend is still intact. What we discussed coming into today's trading session, which I think was really the right way to approach the market, is now that we got through OPEX, this market has the potential to be much looser in either direction. Looser to the downside or potentially looser to the upside. I've been kind of warning of the big picture risks on this market for the last week or two at this point, but I've been trying to say at the same time that we have to respect the trend. So at a minimum, we've been discussing being less bullish, but not necessarily being bearish while this uptrend is still intact. And even after today was another potential warning signal with the Qs trading below the CPI day low, but didn't close below. The SPYs are still fine, and potentially this is where you would want to see another higher low come in. And the IWM is even still actually okay at this point. Still closed above 198.50, which is an important level that we broke out of last week, and we're still sitting above it. So mixed technical signals from the market, but they're generally bullish with some overhanging bearish thought process maybe out there that you could put into your brain that might have you properly being less bullish. But really what we want to do right now is trade in the direction of the market. And if you did that, there were some great trades this morning, particularly to the short side. Definitely a little bit of a two-way market. There were some opportunities to catch some bounce trades as well. But I think that almost everything that we had discussed in the morning meeting today was generally looking at the short side of the market. We're saying, a lot of if-then statements. If the Qs lose that level, if some of these stocks lose their levels, they could be shorts, right? So we talked about NVIDIA as a short through 700. Difficult trade because you're shorting the third 5-minute bar down after it just dived $20 in 12 minutes. So it's a really difficult short, but it worked all the same, and it closed below that price. A better, easier trade that we communicated was AMD short through 170. That broke on the first bar of the day, so the risk on that was still expensive, like $1.80 on risk versus if you wanted to short through 170 versus highs. Crazy stock, so the risk even on that's a little bit rich for my blood, but it paid if you took it. You got $8 worth of downside on your $1.80 worth of risk on the upside. Just a little bit more risk even there than I would want to take. Even though that was much more suitable probably than trying to short NVIDIA. We talked about Microsoft as a short potentially through 400. Tricky trade. It kind of held up well. It traded below the level, but did not close below the level. It closed above the level. So Microsoft is, at the end of the day here, still fully intact. Another one that's intact that we talked about was the Apple 180 level. The low of the day today in Apple is 180 on the dot. I've always loved how Apple is a stock that respects its levels. It respects its levels, I think, more than most other names that are out there that you can find. It tends to be a stock that trades relatively clean. So holding 180 to the dot is still not surprising, and it's impressive, honestly. And these are levels that we need to continue to pay attention to for Microsoft, for Apple. We talked about, Amazon. If it loses these levels, that you could be looking at a gap fill at this point. With that said, on the one hand, you could be looking for the gap fill. On the other hand, this is a bullish pattern. It's basically a bull flag. We're digesting a great earnings report. The 21 EMA is catching up to the base. But we discussed that maybe you could try an off the open short on this thing as a jump start on the break of this absolute low. I think it worked okay, but still, by the end of the day here, these things, held in okay. Meta, same deal. Meta held in really well this morning. It's a great looking daily chart, but if you begin to lose the market, then maybe you start to lose some support levels in this thing. You lose this $460. You go for a potential gap fill. That type of trade, if it were to happen, and I would describe it still as the lower probability trade, can happen very, very fast. So we want to be prepared for those trades, those potential momentum downside trades that could come into this market very fast, especially as we are through OPEX. If the market loses its key levels, again, then you could see a fast trade into the gap for Amazon, a fast trade into the gap for Meta. You could see Apple lose 180 and drop another $8 to $12 past that 180 break, and those are all spots that we need to pay attention to. We did get some of that weakness in the semiconductors, though. The NVIDIA with a much deeper pullback for the first time here, losing its 80 EMA on the daily since the breakout, back over $500. AMD a little bit weaker as well. SMCI was all over the place, held $700 this morning very well, where it kind of bottomed out at. And that was actually the level that we had discussed as a potential target, I think, actually on Friday. We talked about $700 as a potential target short on the SMCI trade for the deeper correction into the equilibrium zone, because the $700 area is broadly a spot on the daily chart that it broke out from back over here. So that was a great day and a half trade for anybody that caught it. And again, intraday, we called out the 5-minute RDR to the short side on SMCI on Friday on the third bar of the day, when it basically, short on the way down, right? That's what we kept saying. Pierced through on the third bar, shorted back down. So the 5-minute RDR trade with the daily chart extension, still wouldn't describe it as easy, but honestly, the risk on that trade, I mean, these are the types of trades that we're looking for. This is SMCI, the way that it was trading, moving $10 every 5 minutes, basically. You were actually able to take that short if you executed well and you were focused on it for about $2 worth of risk for a move on the daily chart, because what we look for is intraday risk for daily chart reward. For a move on the daily chart, that's almost $400. And that's incredible. It's just a really, really good risk reward to get $2 and change worth of risk for $400 almost worth of reward in a day and a half. But we knew that trade had the potential to be there. So glad to see that some people caught that. My focus again was entirely on the ETF, because I didn't want to take the single stock risk in the same way. I liquidated the position today. It worked really well. I thought about being a little bit greedier with this. I just decided I didn't really want to be having a big SOXL position into NVIDIA earnings tomorrow, and it was really kind of at my target. So I figured, let me just take this, then maybe I can reassess after earnings. I do still have some TQQQ short. The other thing I really tried to bite into today, but once again just felt like I didn't have enough reward to keep it, was this VIX trade. Talked about going long VXX and UVIXY through the highs of like Thursday, Friday. So that's basically for VXX, the range between 1462 and 1472. So I was buying this thing sort of pre-market, and then I was able to add VXX and UVIXY on the way up when they were clearing those levels. And they're great trades. The way that I'm trading this thing, and I'm just doing what I did last time too, is I'm just being super greedy. I either want to be very, very, very right on this or not really make anything. But at the end of the day, I do have to be prudent with the way this thing trades. I didn't feel that I had a strong enough profit cushion, so I liquidated both the positions into the close for a little profit. Nothing to be upset about, that's for sure. But I just didn't think I had enough of a profit cushion to really keep it. If this VXX could have closed at 15 or better, I would have kept it. I would have kept both, probably. but it just couldn't do it. This market had a little bit too much strength into the close. You can see the SPYs closed at the high of kind of the afternoon range. The Qs kind of rolled up pretty well, and they closed at highs of the day outside of the opening price action. So just didn't feel like it was responsible to keep them. Another trade that we were going after today was a firm to the short side, which I also ended up stopping myself out of intraday for a small profit, gapping below big $38 support. So there's a potential breakaway gap to the downside. A little bit tricky with some downside extension after Friday's bigger move into that 38, but there was the potential of getting a day two there. So shorted that one early on. Initially versus 38, I was able to lower my stop to highs, and then I was able to lower my stop again into this kind of range. I just stopped myself out. So that was a decent trade also, even if it didn't end up closing well. So yeah, so I think there was a lot of good stuff out there. It was a two-way market. We got some momentum downside follow-through that the bears, I think, wanted from some of these names intraday, but yet we didn't actually close below any key levels, and our big picture uptrends are still intact. So I think that's pretty much all I got for you guys today. I don't really have too much. It was good to take a few days off. It was good to clear my head, I think, for a few days. I hope it was the same for you guys. It was a really big 3 weeks there. These last 3 weeks, it's a lot going on, a lot of heavy trading, I know, on my end. So like I said in the morning meeting, I decided to take the 3-day weekend and just totally shut off and tune out as far as markets go. And it's usually not how I roll. Usually in the mornings, even on the weekend, I'm doing some research, some fundamental research, some individual stock research, or I'm catching up on some research notes from during the week that I didn't have the time to read. And this last 3-day weekend, I was like, you know what? It's been such an intense 3 weeks, but really good overall trading for these last 3 weeks that it makes sense just to give my head rest. I think we all need to do that sometimes. So that is all that I've got for you guys. I don't really have too much. I'm happy to answer any questions that anybody has. You go to Beaver Creek? I've never skied Beaver Creek, actually. It is funny, some of the words that compliance is blocked. Anything else, guys? Just scrolling through here. From Carol, there was a bar during the midday lunch hour that negated the bears, the 1240 bar. Yeah, I noticed that as well. It turned out to kind of be an inside and up, but it was almost like a king queen. So if you combine these two 5-minute bars into one bar, if you could do that, you basically be looking at like a bigger hammer here, right? That's what that becomes. That's why, a king queen reversal setup is basically a big red Maribozu followed by a big green Maribozu, or the opposite if it's at highs. But really all that is, it's the exact same thing as a hammer, because if you just combined these two candles into one candle, you'd be looking at a candle with a small body and a pretty large down tail. Not massive confirming volume, but this was definitely a notable 2-bar combo here that gave a little bit of a change to the market environment today, and gave us a little bit of a stronger afternoon session, which there's nothing new about that, right? We see a lot of strong afternoon sessions. Joshua wants to know what I think about Dash. It's hard to call it a bottoming candle or a bottoming tail when it's an inside candle. I do think that so generally I would say that the shape of an inside bar is not as important as it would be otherwise, just because of its location. But if you're a trader who trades inside candles for trend continuation or for momentum continuation, they are definitely candles that are worth paying attention to as far as what the internals of the inside bar look like. So the inside bar, and it is an inside bar, the internals of it are bullish because of the downside tail. But again, it is just an inside candle, so I wouldn't get too excited about it. I haven't really followed the Dash story here, but what happened here? Friday was earnings, so they bought it up heavy on Thursday and crushed it with a big gap down on Friday on the earnings report, and that's why the volume was there. I'm honestly not 100% sure. But yeah, they bought it back pretty decently on Friday, and then they gave you an inside candle today. So technically, that inside bar today is one that you could take in either direction if you like to trade this stock. So you could try it inside and up tomorrow for continuation of it getting bought back up post the earnings report, or you could look for the inside and down because there was originally a gap down, and there might be some sellers still around who want to take that thing lower. So yeah, worth keeping an eye on. In YouTube, Apex Joy wants to know what my view is on Bitcoin. my technical analysis view or my fundamental view. The chart looks great. Honestly, the chart looks great. It's been trading well. It's at recent highs in the upper right hand corner. It was weak at one point today. They sold it down, and then they totally reversed this thing and brought it all the way back up, which was impressive. I trade this Mara sometimes. I've been out of it for a while. This thing managed to be much weaker compared to Bitcoin. So the Bitcoin chart and probably the technicals are all that matter for something that is worthless. It's only worth as much as the next person is willing to pay for it. Look, they look really bullish, because somebody is willing to buy it. Because otherwise, there's zero value in this thing. Thanks for the question. From Gabriel on YouTube, what do I think about APP? What is this? AppLovin. Yeah, that's what I thought. This thing looks great. Yeah, this thing looks great. I don't have a lot of experience trading it, but it looks great holding above 50. I like that the ADMA caught up to the earnings low from a couple days ago. It's a little bit extended here, but you could probably try this long versus today's low if the market is supportive of this type of stock. I couldn't tell you anything about what the earnings report looked like. I don't even think I looked at it. But obviously the reaction here was good, so there must be something good in that report. And the chart looks great, just a little bit extended. Definitely one that I would keep an eye on for continuation. Cool. Anything else, gang? I'm happy to do a short one today if there's no real questions. I didn't have a whole lot to talk about. Semiconductors finally corrected. They've had that parabolic move in that SMCI. It's back down to earth. We lost NVIDIA a little bit. We lost Soxel. But it's all going to depend on NVIDIA earnings, which are tomorrow. And I think we also have the Fed minutes tomorrow, which could be a little bit market moving also. It'll probably be a non-event. It's a little bit too backwards looking at this point. But we've got a couple things on our radar. Otherwise, it's a light week in terms of it both being a shorter 4-day week and in terms of it being light on economic numbers. So I guess on that note, we'll do a short one today. Have a great night, everybody, and I will see you all tomorrow. If you're on YouTube, you know what to do. Give me that thumbs up. Have a great night, everybody.